Let's talk about the future of money. But it's probably not what you're thinking. We're not talking about crypto here. We're talking about an idea that could completely reshape our financial world. And it all starts with a simple what if. Okay, so first, just imagine the cash in your wallet wasn't actually paper or coins. It's just digital, zeros and ones. Now, let's add another layer to that. Now imagine that digital money isn't sitting in your account at Chase or Bank of America or wherever you bank. That whole middle layer, gone. So, where is it? And here's the kicker. This new digital cash is a direct claim on your country's central bank. You're basically banking directly with the government itself. This whole concept has a name. And again, it's not Bitcoin. It's called a central bank digital currency, or CBDC for short. And believe me, it has the potential to redefine everything we think we know about money. All right, so what is this thing really? Well, at its heart, a CBDC is just a digital version of a country's official money. So if the US made one, it'd be a digital dollar. In Europe, a digital euro. It's the money you already use, just in a totally new format. Let's get a little more specific. A CBDC is a direct liability of the government. Now, what that really means is that it's issued by the central bank itself, not a private company, not a crypto startup. This is official government-backed digital cash. And this is maybe the most important point to get right. A CBDC is centralized. It's controlled by the government. Cryptocurrency is, by design, decentralized. A CBDC is official legal tender. Crypto is not. They are completely different animals. Okay, so I know what you're probably thinking. Hang on, my money is already digital. I tap my card, I use apps, I barely touch cash. And you know what? You're right. But the difference, the key difference, is in the plumbing. It's about where that digital money actually lives. See, right now, your bank balance is basically an IOU from your commercial bank. It's their promise to pay you. But with a CBDC, specifically a retail one meant for all of us, it could be a direct liability of the central bank. You're cutting out the middleman, and that could change banking and payments forever. So we know what it is, but why? Why are governments all over the world suddenly in a mad dash to develop this stuff? Well, it really boils down to one thing: staying in control as the financial world goes digital at lightning speed. Now, governments will tell you they see a ton of potential upsides. They talk about instant payments, 24/7, lower fees, helping people who don't have bank accounts get into the financial system. And all that's true, but their reasons go a little deeper than just making things more efficient. A huge driver here is the explosion of private stablecoins and decentralized finance, or DeFi. If a private digital currency, say one from a big tech company, ever took off, it could seriously weaken a central bank's power to steer the economy. So CBDCs are their answer, a government-backed digital competitor to keep them in the game. And this is where the conversation gets really, really interesting, and honestly, pretty controversial. Because this idea of government digital money has kicked off a massive debate about its incredible promise versus its potential peril. So on one side, you have supporters painting this picture of a super efficient economy. Instant payments, less fraud, even sending stimulus checks directly to people in a crisis. But then you have the critics, and they're raising some serious red flags about total government surveillance, the death of financial privacy, and even the idea of programmable money, where the government could literally control what you spend it on. It's a classic debate, efficiency versus freedom. And this really gets to the core of what critics are so worried about. Physical cash gives you anonymity, but in a world where the government issues the digital money and can see the ledger, well, every single transaction could be tracked, recorded, and analyzed. So is this all just some future sci-fi concept? Absolutely not. This is one of the hottest topics in global finance. It's not theory anymore. It is happening right now. There is a global race underway. You've got countries like China that are already well into public trials with their digital yuan. The vast majority of other nations, including the US and the EU, are deep in research and development. The critical decisions about how this will all work are being made as we speak. At this point, the conversation isn't really about if CBDCs are coming. For most big economies, it feels like a done deal. The real crucial question is how. How will they be designed? What protections will be built in, or won't be? So, to wrap it up in a nutshell, a central bank digital currency is exactly what it sounds like. It's digital government money. It is not crypto. It's not decentralized, and in almost every version being talked about, it won't be anonymous like the cash in your pocket.
Ultimately, the tech to do this is just a tool. It isn't inherently good or bad. Its impact will come down to the policy choices we make. It could make our financial system faster and more inclusive, or it could change our relationship with privacy forever. And that leaves us with a pretty massive question to think about. What kind of financial future do we actually want to build?